Hi, this is Chris Masiello from Better Homes and Gardens, the Masiello Group, and I'm here to spend some time with you today just to talk about today's housing market. And of course, there's a lot of conversation about today's market, and conversation about is this a bubble? How long is it going to last? And thought we'd try to put some context to that over the next few minutes. So as you can see on my screen, you can look at the median home prices, and you can see that generally in the states that we operate in, New Hampshire, Maine, and Vermont, that prices have gone up over the last 12 months, somewhere between 17 and 19%, which is a lot of appreciation in a year. And we don't really see that continuing long term. However, we do see the market continuing to have appreciation in it. So, we might have appreciation in maybe not in terms of 17 to 19%, but maybe more in the range of 7 to 10% maybe next year. So appreciation rates like that are pretty hard to sustain. And we're in this very kind of textbook supply and demand cycle, which we'll talk about a little bit more in the coming slides. Average days on market, somewhere between, as you can see, 32 and just under 80 days. Those are pretty unusual short lengths for properties to be on the market. And of course, that's just a byproduct of the inventory and the briskness of the market. And then months of inventory. So months of inventory are basically measured by the number of properties that are currently on the market that are available for sale. And as you can see, that the ready supply of inventory is really low, and they're historic lows. And we'll talk a little bit about next about how we got there with that. So how do we get such a hot housing market, so to speak? And there's kind of three factors to it. First is that the supply of homes that we're operating with today, that we're working with, the supply of housing stock, is about the same today as it was 10 to 12 years ago. But yet we still have a growing population. So the second reason is that as it relates to the population is that we're working with really demographic trends that are driving today's market. So even if we didn't have a pandemic, or even if we didn't have large numbers of people moving to northern New England, we would still be experiencing this type of market. Right now in the country, we've got 62 million millennials and 55 million baby boomers. And both of those demographic groups are in the housing market at the same time, driving demand. Now, they all have different needs, and there's different stratifications between each group, but they still are in the market, generally speaking, competing for the same property. And then lastly is mortgage rates. Mortgage rates are at either all-time lows or near record lows. And so these three things are really driving today's environment. And just to talk about the housing supply and as it relates to the inventory that we've had over the last 10 or 12 years, the market that we have today was really kind of born out of the last recession into the 2008 financial crisis, because that's when we really saw a constriction of home building across the country, and in more particular in the Northeast. And so what we have is we're basically working with the same housing supply today that we had 10 or 12 years ago, but with an expanded population. So next, is this a bubble? And I think in the near term, I would say no, it's not a bubble. And here are 5 factors for you to consider. First, we're in this the quintessence of a supply and demand scenario. As I just said, we've had the same inventory today that we had 10 to 12 years ago, but with an expanded population. And those demographic trends are really kind of at the heart of what's driving the environment right now, the market conditions that we have. Next is construction challenges. So the new construction industry is typically what would pick up the slack in supply in a faster real estate market. But we don't have that today. The national housing statistics are that generally the new construction industry has been building somewhere between 750 and 1.5 million new homes a year. We really need to be tooled for somewhere in the 2.5 to 3 million homes a year. And so new homes. And so what's happened is that the building industry, the millwork industry and the building supply industry really has got to really start to catch up with the demand. And of course, then there's also, overlay that COVID, where there's certainly it's had a problem with, it's impacted construction runs and factory runs, and really had impact on production lines. Next is the local regulatory environment as it relates to new subdivision approvals. It's a slow process, and there really hasn't been a lot of work in most of the markets, again, in northern New England, for new subdivision work. And so because of that, that there really isn't a pipeline of available building lots, which of course get converted into houses, that's due to hit the market. Now, with the demand that we have, I suspect that we'll see that in the coming months, but that will take time to ramp up. And as I had said, the building process, the building lot approval process can be slow. Next, the poor lending practices that we had back in the 2008, 2005 to 2008 market, subprime lending and all that, that's really been removed from the lending environment. So we have really strong, solid lending practices right now. And so this market really isn't really being driven by subprime interest rates, with no income verification loans and all those types of things that really kind of inflated the last housing cycle 10 or 12 years ago. And that's pretty much all been removed from the marketplace. And then lastly, low interest rates. And it's projected that we'll continue to have low interest rates for the foreseeable future. No one really knows exactly what that is, but if you're somewhere in the high 2s to, let's say, maybe 4%, but probably more generally in the mid 3s, those are really historically consistently low rates. And that makes it much easier for people to enter the housing market. So how long will it last? It's like any other market, hard to tell. But we've got really good fundamentals now, and I would say from looking at this, whether it's a bubble or not, we in northern New England have a great way of life here that's attracting a lot of people, and what's driving this is strictly supply and demand. There's no artificial influences on the market, like subprime lending and things like that. So I think we can look forward to a pretty healthy market over the next few years, and as new construction starts to lessen the pressure on the inventory, there'll be a lot more opportunities in the market for people. So that's our view of things. It was great to spend time with you. And as always, we're here to help you with all your needs. Take care. Thank you.